Well, to discuss further how those CFIUS provisions could affect both American and international businesses, I'm joined by two guests. Arthur Dong of Georgetown's McDonough School of Business is here with me in studio, and Merrill Matthews, a resident scholar with the Institute for Policy Innovation, joins us from Dallas, Texas. Welcome, gentlemen.
Thank you.
Thank you.
So, Arthur, I'm going to start with you. How much do you think these restrictions on investment, especially when it comes to critical technology, are going to hamper the amount of Chinese investment we see in the U.S.?
Oh, this is going to be a significant enlargement of CFIUS. What we see is a major step back from the traditional manner in which CFIUS was in terms practiced. And so what we're seeing now is an enlargement in both in scope, in terms of the types of products and services that will come under the purview of CFIUS, as well as a new set of players in the debate, which is the Pentagon, as well as various security-related organs of the U.S. government, having a say now in terms of oversight of foreign investment in the United States.
And Merrill, obviously this is coming at a time of rising trade tensions between China and the U.S. And we saw that China's Ministry of Foreign Affairs spokesman said that we urge the U.S. to discard its outdated Cold War and zero-sum mentality. Why do you think the bill is so focused on taking this approach with China?
Because it wants to move forward. The U.S. has become very concerned about the Made in China 2025 initiative and the Belt and Road initiative, and the bill specifically requires a examination of this, a report to be released in 2 years on how those initiatives are going. So it sees a balance of power challenge coming from China, and it wants to try to address that initially before it gets too far out of hand.
Now, what about the U.S. investments in China? Are you expecting some sort of retaliatory measures?
Yes, I also see that what was passed today also involves investment in China by American companies, that companies that are engaged in various aspects of technology and technology transfer will come under increasing scrutiny with the enactment of this with these new measures.
So, Merrill, if you're an American company seeing this going down, what do you think the reaction is from the U.S. business community?
Oh, I think it's going to be, number one, the U.S. business community has been critical of the tech transfer issues and intellectual property issues they felt like were going on in China, so I think they'll be happy about that. On the other hand, it makes investing in China and vice versa. It raises the bar, raises the hurdles for that to happen, and I think you're going to see a significant decline in investment. In fact, just a report came out just recently saying that Chinese investment in the U.S. had dropped 92% in the first 5 months of this year compared to the first 5 months of last year. That's a significant decline, and that was before this legislation was passed.
Now, we know some of that was due to currency controls and not just due to the tariffs, but Arthur, as we look at how this is going to affect U.S. businesses, Silicon Valley, for example, some of these big deals with Tesla, for example, how do you see this affecting some of these big tech companies here?
Well, most certainly the larger tech companies here will be placed under increasing scrutiny with regard to who they're partnering with and who are making investments in their companies. One of the aspects where we've seen, let's say, a consistent Chinese investment over the past several years has been in startup companies in Silicon Valley. With this new imposition of these new measures, you're going to see a chilling effect with regard to both institutional and private investors examining potential new ventures and startup companies in the United States.
And Merrill, are there any other industries you think will also see a big impact under these new CFIUS rules?
Well, it's hard to say. We've already, for some time, there's been some complaint that Chinese investors had been raising the price of real estate in the U.S. because they had been buying so much of it. And I noticed a report recently saying that had begun to cut back some. But I suspect there'll be a widespread, and interestingly, this administration sees an awful lot of things as national security concerns. Things like just even buying foreign cars. It's raising a threat that it may put some tariffs on those because of cars. And nobody thinks buying a Hyundai or a BMW is a national security threat to the U.S., but the president's threatening to use that initiative.
So given that we know that obviously China and Russia seem to be the focus of this, but what about other countries? How is this going to affect them, Arthur?
Well, you know, the manner in which this bill was written, it didn't specifically name China and Russia. which means the United States doesn't want to box itself into a corner. It wants to give itself the widest range of opportunity with regard to identifying states who might use or appropriate American technology for uses that ultimately could hurt us.
So then,
Michelle, let me
Merrill,
weigh in on that. There is no mention of a country in the export controls section, but there's 2 pages in the CFIUS section of the bill, and it specifically targets China and the report that needs to be done. So China's mentioned 56 times in the defense bill, and another 20 times or so for the word Chinese. So there's a lot of interest and concern raised in this legislation.
So basically, if the goal of this is to protect American companies, protect American businesses, Arthur, what do American companies have to gain and lose with this bill?
Well, what they have to gain is it certainly keeps out potential and actual competitors out of the U.S. marketplace, ZTE being one of those examples, that they're going to be completely shut out of the telecom marketplace in the United States as a result of these new regulations. But companies that are, again, new and emerging technology companies that have had a tremendous difficulty in sourcing funds in the United States, they're going to really feel the impact of the sort of absence of Chinese investment into this marketplace.
And the same question to you, Merrill, about the companies in the U.S. that stand to gain and lose out from this bill.
Well, there's been a lot of money floating around for investing in tech money. So if there isn't Chinese money, I suspect there will be other countries stepping up to do that. One of the concerns I think the bill tries to raise is, are there going to be shell companies or shell organizations that China might use to with someone, say, in the Philippines or Singapore, and use that money to invest in the U.S. So we don't know how this is going to shake out yet, but it's certainly going to affect the investment in these tech startups.
So given this momentum then that we may see, Arthur, how do you see this affecting the U.S. economy in the longer term?
Well, in the longer term, you know, for the past 40 years, the United States, with regard to investment in the United States, has always seen inbound investment as a positive, net positive thing. If anybody wanted to invest in the United States, we've always sort of viewed that that's good, you're putting your money at risk, and the investments you're making in the United States ultimately help the American economy. That debate is going to completely shift as a result of a more nuanced understanding in terms of who potential rivals are to American technological supremacy.
And Merrill, we have about 30 seconds left. How do you see this shaking out going forward?
Oh, I don't know. The president has actually been a little less restrictive than Congress. The restrictions on ZTE were pushed more by Congress and the president, who sort of pushed back on that a little bit. I just don't think we know how far this is going to go. I think that's something we're just going to have to see.
Certainly a lot of uncertainty there. Thank you so much to our panel, Professor Arthur Dong of Georgetown University's School of Business, and Merrill Matthews, resident scholar with the Institute for Policy Innovation.